Some of us could be living in retirement for more than 30 years, so it's really important that you understand how your pensions will be used to build up your retirement and how it will help you retire. So the first step is to understand what pensions you have. So there are two main options really. There's the older defined benefit pensions, which have a promise of income from a certain age, so no risk for the individual, or very little if any. Or there are the more modern pensions, which are invested pots of money called defined contribution pensions, where you have to choose how you contribute and how you invest the funds to provide for your retirement. The next step, once you've found out which pension it is that you have, is to figure out how much it's going to be worth and when it's going to be paid. There's usually an annual statement that you'll get from your pension provider, which will have an illustration of how much your pension should be worth and from what age as well. So if you haven't got one of those, best to ask for one of those as well. Once you have an idea of how much your pension is worth, it's important to then think about what you'll need in retirement and whether that will be enough. So think about what your expenses are and what they'll likely be, especially with what you want to do, and compare that to what you've got now. If it's not quite there, which for a lot it isn't, you might need to think about how you can plug that gap and how you might be able to contribute further to build up your retirement provision. So if you're going to be retiring soon, it's important to think about how you're going to be drawing from your pension. So would you want to buy an annuity, take the risk off the table for yourself, but ultimately accept what could be a slightly lower income than if you were willing to take that risk? Or do you want to draw down from your funds with the flexibilities you now have with pensions, keep the pot invested and draw as much as you need as and when, knowing that you're still exposed to some level of investment risk depending on what risk you've chosen. Depending on what option you choose will dictate how you should be managing and investing your pension coming up to your chosen retirement date. If you do have an annual income of more than £110,000 a year, or if your pension pot is approaching £1 million, you may need to consider how you contribute moving forward and what other actions you might need to take to protect yourself against some additional tax charges as well. Ultimately, it's very easy to understand how people can become disengaged from their pensions, as there have been a lot of changes and they can be seen as quite complex. If you're not comfortable reviewing your own pension arrangements, it is important you do get advice or at least see someone who could give you a proper steer.